Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. According to local news outlet La Presse on Wednesday, the depot it placement the Quebec or CDPQ, an institutional investor chartered with managing retirement assets in Canada's predominantly French-speaking province of Quebec, worth of almost the entirety of it, 100 million. The move came just 10 months after the CDPQ and crowd equity firm Westgate made a joint investment of $400 million into Celsius at a valuation of $3 billion. At that time, Celsius was over 1,000 employees, $25 billion in total assets, and $850 million in cumulative interest paid to depositors. However, as an unregulated and centralized entity, depositors' assets are not protected in the event of losses, nor is the firm subjected to any restrictions of the use of leverage. During the onset of this year's crypto winter, the sudden and violent crash of Bitcoin and other digital assets, it appears that the loss on Celsius represents only a negligible fraction of the CDPQ's portfolio. By June 30, the CPDQ managed a combined, according to local news outlet, no. The United States government's sanctioning of the open source code that makes up the Tornado Cash privacy protocol may be shocking, but it's not surprising. America's been tightening its grip over the global financial system for decades, ostensibly to cut down on bad behavior, but also to project power abroad. Economic sanctions, like the ones enforced by the aptly named Office of the Foreign Asset Control, are a powerful weapon. The agency website states that it enforces economic and trade sanctions based on U.S. foreign policy and national security goals. It does this to fight drug dealers, terrorists, and other threats to the national security, foreign policy, or economy of the United States. Scary stuff, particularly when enforced by the issuers of the global reserve currency. But therein lies the rub, because the more the U.S. weaponizes access to the dollar, the greater the incentive for every other country to find an alternative. One likely winner from this dynamic is Bitcoin. To see why, we need to study the architecture of money. Fiat currencies like the US dollar have no inherent transfer mechanism. Large payment can only be made through the banking system, and banks need government charter to operate. The symbiotic relationship enables governments to not only control the issuance of their money but also access to it. For the issuer of a reserve currency, monetary censorship becomes a powerful weapon, arguably as destructive as bombs and bullets. Bitcoin is different because it has its own censorship-resistant payment system. Anyone can make payments to anyone else with or without the involvement of a licensed intermediary. Governments can still wield power over individual exchange custodians or miners, but they can stop protocol or the community that runs it. Bitcoin is also a political in ways the fiat currencies can never be. Along with ever stricter sanctions regimes, the US has recently taken the drastic step of freezing the foreign exchange reserves of Russia and Afghanistan, regardless of one's opinion of the legitimacy of such acts. They drive home the point that dollar reserves are only useful so long as their owners stay on America's good side. The United States government's sanctioning of the open source code that makes up the Tornado Cash privacy protocol may be shocking, but it's not surprising. America's been tightening its grip over the global financial system for decades, ostensibly to cut down on bad behavior, but also to project power abroad. Economic sanctions like the ones enforced by the Plain Office of Foreign Asset Control are a powerful weapon against U.S. states that it enforces economic and trade sanctions based on U.S. foreign policy and national security goals. It does this to fight drug dealers, terrorists, and other threats to the national security, foreign policy, or economy of the United States. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.